Investors and traders, welcome to the channel. Market chart pattern today is 24th of April 2025. Hope everyone is having a fantastic day. We'll take a look at the key US markets in this video segment. So we'll take a look at the US dollar, we'll take a look at the gold market, we'll take a look at the bond market through the eyes of the bond futures and also the treasury notes, short run of the curve, 2-year treasury note, 10-year treasury note, and the long bond futures. And then we'll take a deep dive into the US stocks indices. As always, this video is for educational purposes only. It is not a financial advice. What we are looking at is our timing model. This is something which I have not covered in quite some time. This is the daily timing model on the daily time basis, so it's a shorter term. I did cover the longer term one, which is the weekly chart. We had key timing coming in on the 31st of March, and we have seen important price action taking place since then. In fact, the timing had kicked in because it was a 2 week. It was a weekly chart. We have to give it 2 weeks on the either side, and we have seen the markets being really jittery. Okay, so what we are looking at right now is that the low which came in on the 7th of April 2025 is a very important low. And then equally important is actually also the low which came in on the 21st of April 2025. So the 7th of April one is the external low, and the 21st of April low, I am marking it as an internal low because there was a chance it could go and take out this low up by a little bit. It hasn't done that, so it's more of an internal retracement. Now, when the 7th of April low was being formed, we had an important timing coming in. And then we also had on the Dow Jones was this a key retracement, or rather a price projection, which was happening. So let me try to draw that for you. Wait, hold on. Let me get rid of this one. Here we go. So take this tool and we project it from here. There we go. So it was the 1.272 projection times the projection of the AB leg right here, and with the key timing coming in, whenever we have when price meets time, we have a completed pattern. So it was a completed pattern right here. And then another really important timing also coming in on the 21st of April, and we are seeing a nice a rebound in the market. This is of course the Dow Jones Industrial Average in the S&P 500, which is a little bit stronger, and so is the nasdaq 100. So in my opinion, what we have seen is a really important low occur right here. If this low of the 7th of April is taken out to the downside, then it is changing a lot of things because this, at least this leg, is a completed pattern. It's very similar to the 5th of August 2024 low, because it's an ABCD. We had a key timing come in as well, but of course things are a little bit different in 2025. So this is why I was saying that there's a chance that this low on the 7th of April 2025 might be a low which could remain as a low for quite some time, quite long time in 2025. So mark the key dates that we are looking at. So the next minor timing is coming on the 8th of May. Then 27th to 28th of May is important timing. It's also a major timing zone. So with this being a daily chart, we have to give it 2 to 3 trading days on either side of these dates. And then we have a very important timing coming in on the 2nd of September. Now the 2nd of September is quite a while away, but this is the thing with the timing models, that we are able to forecast really important timing dates months in advance, sometimes in years in advance as well, but certainly months and weeks in advance. So we'll keep a note of that. And one of the things I would like to mention about the timing is that timing gives a turn in the market. It doesn't necessarily mean that the market, if they have been falling, then they'll start to rise, or if they are rising, they begin to fall. And the reason is that if the timing is accompanied by a pattern formation, such as what we are seeing right now, then we get a turn which is likely to be on the other side. So meaning that this downward pattern it completed, and now what we are looking at is actually the market trying to reverse that downward pattern formation after completion, so trying to move up, in other words. Okay, so with that, well, let's take a look at what is happening with the US dollar. So this is a daily chart of US dollar, and what we can see is that the dollar has been really weak after completing this pattern. You can go back into the archives. We just nailed this one right there. It has fallen quite a bit. Now it's come into the zone. Let me zoom into the weekly chart, which is basically it tried to clear out the zone lows of 99. So I've been actually mentioning that 99 and 98 are really important key levels for the dollar to hold, and it's kind of hanging in there by a thread, because getting below the 98 level, on closing basis, then it's got a chance to move much lower, and challenge these lows, take out these lows as well, possibly. So what we are seeing is some buying coming into dollar, and then we are also seeing some of the equity markets also stabilizing. So that's really interesting to see. But here, this 99 to 98 level in dollar is a key level that the dollar should hold, and we are seeing some signs that there's some sort of buying pressure coming in here. We have seen something similar right here as well, but then what happened was you can see that they just collapsed. So let's see, it's just two very strong days, and then this day today it hasn't done much, just close on the downside. Let's see how it will close the week. Now let's see what is happening in the interest rate market. So this is the 10-year Treasury note, and here what we are seeing is kind of mixed signals. It's a range-bound market. I would have thought that the yields are actually moving lower, so this is why I have drawn this ABCD to the downside, but it remains a fairly challenging zone right here. We see a couple of days when the yields are rising, and then a couple of days when the yields try to move lower. Not a very easy or clean price action. So it could go either way, but the chances I'm favoring lower yields. But we'll have to wait and see if the market remains strong in this region, which is between 38.2% 50% retracement. They got a chance to move higher as well, and an ABCD could take and challenge these highs of around 4.8% level. That is possibility as well. And if we take a look at on the shorter end of the curve, which is the US 2-year, oops, I think it was this one that we were taking a look at. Yep, here we go. So today we saw, again, you can see that's just a range-bound kind of price action. 2 days when we saw the yields move higher, and then today the yields move lower on the shorter end of the curve. I do think the way I've drawn the patterns is that perhaps we are moving lower to 3%, 2.94%. We'll have to wait and see, but it's a little bit of a indecisiveness, in my opinion, a range-bound price action. So I'm favoring yields moving lower. But if we are able to get above this 4.05%, then we are looking at a different pattern formation, with the possibility of this being a double bottom and the yields rising, challenging the top of the range around 4.4% on the 2-year Treasury note. Now let's take a look at the 10-year Treasury note through the eyes of the futures charts, because it's based on the price, sometimes a little bit easier to see. And what we have seen today is actually look sideways price action. Again, it's just bouncing between the resistance levels, and then it's got a chance, maybe we are in this ABCD in this one. However, if I just pull back to the weekly chart, and here we see that there is just great amount of bearishness in this market. This market was down 3 points, or nearly 3% as well, which is something I don't think we have seen, a 3% move in one week going all the way down here. So I think it needs a 3% day to the upside to negate some of this. So this is where it's a little bit challenging to read this market. It just remains a very range bound for shorter term on the daily chart, but there is a possibility this market looks pretty bearish as well. So this ABCD that we're looking at, it might not come to fruition. This is my preferred scenario, but I'm ready to change it if we begin to take out these lows right here. Then we are most likely in ABCD to the downside, challenging these 106 107 level. And then if we take a look at this on the long bond futures, here we go. We have something similar. Look, let me show that to you on the weekly chart. Really bearish market, down 6% in a week, 7 points, 7.5 points. This is, I don't think we have seen this kind of a move. Whether it is the capitulation, and then the market begins to grind higher from here. This is a really big market, bigger than the stock indices. So again, it's giving mixed. It's a bit of a mixed bag, and the ABCD that I was favoring, with yields moving lower, that might not come to fruition. But I think we should find a clear price action pattern formation quite soon. So here you can see that the market keeps on finding resistance from the 38.2% retracement from this high to right here, and it just backs off. Here we go. Now let's take a look at what is happening in the gold market, because the gold market is very interesting. We have seen sharp moves in the gold market to the downside. Let's see how much it came down by. So nearly 7%, and we had seen a 7.23% move before as well, 3 consecutive days, and then it shot back up. Whether it's about to do something similar, we'll have to wait and see. Let me actually show you the monthly chart, because we are in this region where we are very close to our upside price target, which is around 36.40, 36.50, with the possibility of 3800. Whether we get to see 3800, I'm not entirely sure. But again, look at this market is becoming parabolic. The last time we saw this was back in 2011, and we had a pretty good correction for a few years actually. So we'll have to wait and see. This market, it's pretty strong. It has 1, 2 to 3 strong days to the downside, then it just rebounds again. Could it be different this time? We'll have to wait and see. But right now, the volatility in the gold market is just amazing. I mean, it's just the most volatile market I've seen in gold in quite a few years, and I've been watching this market for over a decade. And this volatility, this amount of volatility, is just gold moving 20 points, in a matter of 15 minutes to half an hour. Wow, it's really amazing to see this kind of volatility in the gold market. Then on the silver, let's take a look at the silver. So the silver getting stronger, but not nowhere as near as the gold market, and I think it's got a chance to be getting stronger from here. Here we go. So I think I have to flip this to right here. Actually, I'll have to draw a new pattern formation, but I think we have an outstanding target of 38. This is shorter term, and I think silver is getting stronger by the looks of it, because it pulls back, gets into these support regions, and then it pushes back up higher. Could we get into a situation where silver begins to outperform dollar in terms of daily or weekly moves? We'll have to see. I think that could be possible. We have seen this before, but gold at the moment is just outshining other metals. All right, now let's take a look at the stock indices. So we'll start by taking a look at the S&P 500 cash. This is the weekly chart, and here not much has changed since we did the last video, so I'm not going to go into the details of the patterns that we are watching. I will just mention that look at this long-term trend line is still intact. Market came back and touched this one right here. It came pretty close in 2023 March. Did the same thing now, 7th of April, and 7th of April low is really important. Look, is let me see if it has taken out the highs, 54.81.34, 54.89. 54.81. Yep, so it has taken out the high, so starting a new trend. So there we go, looks strong. This is the pattern we were watching for this region for really important support. The support pattern formation took place, and then of course we had that key timing, which I have revealed today. I had been watching that one for some time, but just wanted to be more clear with the price action and with the timing and this pattern formation completing. I think we have seen an important low right here, so it's getting above this. I think it's getting into this region where we could see tomorrow is Friday, we could see perhaps this is likely to move in there, fill this gap in as well. Maybe we could see some profit taking right here as well, because it's Friday and over the weekend some news can come in. So I'm not sure how many shorter term traders would like to hold a position over the weekend. And if we take a look at this on the ES, which is the S&P E-mini futures, we can see this has also taken out the highs of 10th of April. So that looks good right into this formation. What is also interesting is it's also getting above this resistance zone, so it's getting stronger. And then if we take a look at NDX, which is the nasdaq 100 cash market, and look, it's getting pretty strong as well, up 2.79% or 521 points today. Talk about volatility. Wow, this is like some really amazing kind of volatility. Wow. So again, we completed very nice ABCD formation right into this support zone. 7th of April low is very important, as discussed before on the previous video. Then getting below this low is changing quite a few things. So right here, right now, 7th of April is a completed pattern. Getting below this, changes a lot of things. So different kind of analysis. But right now, I think this market has got a chance to actually move right in here in this resistance zone, and then if it gets in here 21,000, then the all-time highs, they're not too far away. Yeah, so amazing kind of volatility. Wow. Now let's take a look at the YM, which is the Dow Jones. We had a look at this on the cash market when I was doing the timing model, so not going to spend too much time. Very nice clean ABCD one-to-one price projection right into the key timing. And now this one is weaker than the nasdaq 100 and S&P 500, so I would imagine it would get stronger. Let me actually try to draw a retracement. We have quite a lot of these. Let me actually get rid of this one. I have this was a support right here, so it's coming from a previous level, and then this one, we don't need this one. Okay, and then let's just quickly draw a retracement. Wow, there we go. It's still being capped by 50%, but it's got a chance ABCD get above right here. So let me actually try to draw this thing like this, and here we go. So right into this, I see a gap formation right in here. Right in here. Here we go. It's likely to get in here. And then let's take a look at the Russell 2000. This is one of the weakest one. Yeah, it needs more work compared to the S&P 500 and nasdaq 100. But again, not forming new lows. So that's something really interesting. And then NYE. New York Stock Exchange Index, and here we go. It also had a pretty big pullback right into the 61.8% retracement support, and it has retraced quite a bit. This is a slightly different pattern formation to Dow Jones Industrial. This CD leg is just really huge. Looks to be 1.618 times or even beyond that. Let's see that. Wow, so it's even beyond that. That's not something, this is not something usual. We don't really see this that often, but I think what we also have to do is look at this leg right here. Yeah, there we go. So very interesting. I think it's very unusual to see moves go past the 1.618, but unusual times. These were a lot of stress into the markets. So this is what we are looking at in the markets. Just to summarize, we have a key timing coming in on the 7th of April and then 21st of April on the S&P 500 and nasdaq, and also the Dow Jones futures. We completed key pattern formations as well. So when we have price meet time, the pattern is complete, and we have seen nice move to the upside. Therefore, the 7th of April lows remain really important lows. As long as 7th of April low is held, I'm just repeating myself, then the chances are that that could be held for quite some time in 2025. So this is what I'm watching in the market. So thank you very much for watching the video, and if you like our technical analysis, how we look at the markets using Fibonacci retracements, extensions, expansions, projections, and also a few other tools that we like to use for our analysis is the timing tool, and then sometimes I also use statistics as well. So please do subscribe to the channel and hit that bell icon button, that way you will not miss any new videos. And if you like to support the channel, then you'll find the donation link in the description. It will just help me cover some of the costs for running the channel, such as subscription for TradingView, and also just enable me to spend more time analyzing charts so that I can bring some more interesting analysis for you guys to take a look at. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.